New inflation numbers are not good, tripling in just a month and driven by the biggest spike in gas prices in 6 decades. The price at the pump is more than 21% higher than it was just in February. The national average today, $4.15 a gallon, up from $2.98 at the start of the war, although actually down a penny from yesterday. Now, outside of gas and energy, the economic fallout was relatively contained. Food prices flat, meat, cereal, fish, all down since February. But year over year, it's a very different story. Coffee up almost 19%, beef up more than 12%, fruits, vegetables, peanut butter, all more expensive. And average weekly earnings to pay for all of it fell by almost 1% in March. The White House is describing the inflation surge as a short-term disruption, although that may depend on whether the shaky ceasefire holds in Iran and whether the Strait of Hormuz opens up, as the president promised. Here's the director of the White House National Economic Council, Kevin Hassett, just hours ago.
There are boats going through right now, but at about 10% of the normal pace. Once we get back to the normal pace, then we expect things to get back to normal. Once the energy prices start to come down, don't forget that'll put downward pressure on inflation.
I want to bring in Henrietta Treyz, co-founder and director of economic policy at Veda Partners. Julian Castro was Secretary of Housing and Urban Development under President Obama. Katie Rogers is White House correspondent for The New York Times. So, Henrietta, does this report capture the major domestic economic impact of the war, or could there be more to come?
Yeah, unfortunately, this is just the beginning. You know, the reality is we are still getting shipments from the Strait of Hormuz. And that stops next Wednesday. That's the last tanker that's going to come through. And what we're looking at in the food prices, for example, which looked pretty good in today's report, is that those have a lag of 60 to 90 days from when crude first starts to spike. So we are looking not just at right now numbers, but well out into even 2027. And the problem, and you see it in the consumer sentiment data, is that this is obviously felt nationwide. I was just on the phone with my friend Don down in Mississippi. You can see these pain points when, you know, gas is $3.85. in the Gulf states, which is not at all what they were anticipating going into, otherwise low gas rate prices. So we are in a situation here where I'm afraid this is going to escalate. And of course, the strait is not reopened. It is functionally closed, and the costs are going to compound. We have not hit the peak yet of how bad this is going to be.
Mr. Secretary, again, as we noted, while some prices have come down year over year, a lot of these costs are still a lot higher than they were, including shelter, which, of course, was your focus in office at HUD. What's more, consumer sentiment is lower than at any point since World War II. So is it a little bit early for a victory lap?
Well, I mean, as you know, Chris, I mean, the months that we have left between now and November politically is, many lifetimes. But I think that what's happening is that this very strong impression is setting in across the political spectrum that Donald Trump has not lived up to his promise to bring prices down, to bring inflation down, and also that this is of his own doing. Remember, when President Biden grappled with inflation, it was post-pandemic. People, I think, could see a reason for it. They didn't like it. They made their opinions known at the ballot box, obviously, about that in 2024. But this time, the difference is that this falls squarely, I think, in people's minds with Donald Trump, between the tariffs, the big, beautiful bill that focused on big companies and the highest earners at the expense of working people, and now starting this war in Iran that has just skyrocketed the cost of gas, something that people deal with on a daily basis. It does not look good for Republicans.
And if you'd listen to the folks at the White House, as you know, Katie, it's a very different story than what we just heard from the Secretary and from Henrietta. How are they spinning this?
Well, I think you saw officials say this morning, we've always warned that there would be short-term disruptions for this 4 to 5 week war that Americans have to live through. The problem with that is that this is not a war that has completed. The Iranians are already saying the U.S. is not abiding by the terms to even begin negotiating, even as the vice president is in the air to Pakistan to try to negotiate a longer ceasefire and an end to this war. The White House has basically been coasting on just give us a little bit more time, wait it out a little bit longer. And the world of economic stressors on Americans has expanded beyond just the price of eggs. It's now the cost of driving to work, getting to work every day. The White House is also really leaning into the idea that Americans will have bigger tax returns. With no taxes on overtime or tips, but when it's eating into your paycheck to even get to work, the message from Americans is that they're not even breaking even with some of these relief measures. There are bright spots that the White House is leaning on. That's what the Biden administration did. It is much harder to govern on economic messaging than it is to run a campaign on it, and that is what the White House is running into right now.
So, Henrietta, right now, gas prices are nearly 40% higher than they were at the start of this war. The energy industry has a saying that gas prices go up like a rocket, down like a feather. As people look at this, and they try to plan, frankly, from their future, can they plan for their future?
Well, it's really interesting. I'd build off of what Katie was just saying. The cost of gas goes up twice as fast as it comes down. So it's going to continue escalating, and it'll be a while before it starts coming down. And to put some numbers around what we were expecting versus what we're getting, once crude passes $83 a barrel, which we passed long ago, you've wiped out the entire benefit of the One Big Beautiful Bill. So on average, people are getting about $290 back, but they're paying $350 more just to fill up their tank because of the Iran war. So the offsets that the White House is talking about have been completely washed away, and Americans are now paying more, regardless of even the tax cuts that were provided last year.
So is it clear where we would be, Henrietta, if this war in Iran hadn't happened, or maybe even if it had been handled differently? Were we on a more promising path leading into this war?
I'd go back even further than that. We were on an excellent trajectory with manufacturing job growth, with inflation coming down before Liberation Day. This decline has been something that we've felt all year, and it's no surprise that consumer sentiment is the lowest since World War II, as you pointed out. I mean, to think that, I was a staffer in 2008 in the great financial crisis, and things were grim. To think that the American public feels even worse now than they do then is wild. And unfortunately, as I suggested, we haven't even faced the full brunt of the war yet.